Let's talk about money. Not having money necessarily, but understanding money. Specifically, we're diving into financial literacy, what it is, why it matters, and most importantly, how you can boost your level. Now you might be thinking, I'm not an accountant, I don't need to be a financial whiz. But financial literacy isn't about becoming a Wall Street guru. It's about having a basic understanding of how money works, so you can make informed decisions with it. It's about feeling confident, not confused, when you're dealing with things like budgeting, saving, debt, and investing. So why is this particularly relevant right now, especially here in the US? Well, let's look at the stats. Numerous studies show a significant portion of Americans lack basic financial literacy. We're talking about things like understanding compound interest, being able to calculate loan payments, or even knowing the difference between a stock and a bond. This lack of knowledge can lead to poor financial choices, racking up unnecessary debt, falling prey to predatory lending, and ultimately struggling to achieve financial security. Think about it. Student loans are a massive burden for millions. Credit card debt is consistently high. Many people aren't saving enough for retirement, and a surprising number have no emergency fund. These aren't just individual problems, they impact the entire economy. A financially literate population is a stronger, more stable population. So how does financial literacy actually work? It's built on a few core concepts. Let's break down some examples. First, budgeting. It's not about restriction, it's about awareness. Knowing where your money is going is the first step. Imagine Sarah earns $3,000 a month. Without a budget, she might just spend. With a budget, she can allocate funds for rent, food, transportation, entertainment, and crucially, savings. There are tons of tools, apps, spreadsheets, even just pen and paper to help you track your income and expenses. Next, understanding debt. Not all debt is bad. A mortgage can help you build equity in a home. Student loans can fund your education. But high-interest debt, like credit cards, can quickly spiral out of control. Let's say you have a $2,000 credit card balance with a 20% interest rate. If you only make the minimum payment, it could take years to pay it off, and you'll end up paying a significant amount in interest. Knowing how interest works and prioritizing debt repayment is crucial. Then there's saving and investing. Saving is setting money aside for short-term goals, like a vacation or a down payment on a car. Investing is putting your money to work to grow over the long term, like for retirement. Let's consider Mark and Lisa. Mark puts $100 a month into a savings account earning 1% interest. Lisa invests $100 a month in a diversified stock market fund, which historically has earned an average of around 7–10% per year. Over 30 years, Lisa's investment could grow to significantly more than Mark's savings, thanks to the power of compounding, earning returns on your initial investment and on the returns themselves. Now let's talk about credit scores. Your credit score is a 3-digit number that lenders use to assess your creditworthiness. A good credit score can get you better interest rates on loans, credit cards, and even insurance. Paying your bills on time, keeping your credit utilization low, the amount of credit you use compared to your total credit limit, and avoiding opening too many credit accounts at once can all help improve your credit score. Finally, understanding taxes. Taxes can seem complicated, but it's important to understand how they work. Knowing about different tax deductions and credits can help you reduce your tax liability. It's also wise to understand different account types like 401(k)s and IRAs, which offer tax advantages for retirement savings. So how do you increase your financial literacy? Here are a few tips. Read books and articles. There's a wealth of information available online and in libraries. Take online courses. Many free or low-cost courses can teach you the basics of personal finance. Listen to podcasts. Personal finance podcasts can make learning fun and engaging. Follow reputable financial blogs and websites. Be sure to check the source and look for unbiased information. Talk to a financial advisor. A professional can provide personalized guidance based on your specific situation. Practice what you learn. Start budgeting, track your expenses, and make small investments. It's not about overnight success. Improving your financial literacy is a journey, not a destination. Start small, be consistent, and don't be afraid to ask for help. To recap, financial literacy is understanding how money works. It's essential for making informed financial decisions and achieving financial security. It encompasses budgeting, debt management, saving, investing, credit scores, and taxes. You can improve your financial literacy by reading, taking courses, listening to podcasts, and practicing what you learn. Start today and take control of your financial future. Remember, this information is for educational purposes only and should not be taken as financial advice. Always consult with a qualified financial professional before making investment decisions.